Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Now let's take a look at the gold market as usual. So on the gold market, as you can see, logical reaction yesterday. The stock market has dropped miserably. Gold market has got some support because we have talked about it in the weekly research. We said that the dropping share market, stock market will provide the support to the gold because investors will start to search the assets where they could secure to keep the profits that they got on the stock market and to save their assets. And the gold market is the safe haven enduring the inflation. Actually, the driving factor for the gold market is inflation. And yesterday it was an interesting combination of the different behaviors. So in one session simultaneously, as the yields have dropped on the bond market, as the stock market has dropped. And that simultaneously has provided double support. The first support has come from the interest yields, interest rates on the treasury bonds, and second support has come from the extraction of the big amount of money out from the stock market. That has pushed gold prices higher. As this actually the same action, the same price behavior that we see on the Japanese yen. This rally on the Japanese yen yesterday has happened particularly by the same reason. And we have talked about this in the weekly research. We said that probably in the beginning of the week market could show some upward action by some technical reasons. So on the daily chart, we guys do not have a lot of changes. So as market wasn't able to reestablish upward action here and has shown another drop here, it still stands around the same 1330 support. So I think that the situation with the stock market is a temporal one, because the impact of the interest rates rising has long-lasting action compared to some dropping on the stock market, and it has more valuable for gold markets, has more pressure on the gold market, because this is just a part of the global interest rate cycle. While from time to time the dropping of the stock market and extraction of some part of the money and put them in the gold market, gold funds, really could provide some support to gold market as well. So by later here we have the bearish context for trading, guys, because we have the bearish trend. Here market stands in minor retracement, and actually, guys, as we have estimated in our weekly research, this action, upward action and downward action last week, was the large bearish engulfing pattern on the weekly chart. So it seems that until market stands below this top, we can't talk about reestablishing on the bullish context. So while market keeps engulfing pattern valid, context in the short-term perspective will remain bearish until either market will rise above this top or the target of this engulfing will be completed. So to understand where the target stands, we need 4-hour time frame chart, because here the same engulfing, weekly engulfing, takes the shape of the hand shoulders pattern. So on weekend we have suggested that maybe neckline could be drawn a bit different manner, but this last drop on Friday makes me think that probably here is the major point of the neckline should be. And here we have right now the forming of the right shoulder of the same pattern. So here we have retracement back inside of the body of the engulfing, just because this is the part of the previous week, guys. So actually this behavior of the 1 week, and that has become the part of the engulfing pattern. That's why I have united. It's the one action. That's why the neckline is forming of the right shoulder starts since the beginning of this week. And I think that's more correct to use this shape of the potential head and shoulders pattern. So trying to calculate the target, we probably could get some kind of the ABCD pattern here to the downside, or to use the classical target. Both of them are point mostly in the same areas. This is around 1290, 30 even target, 30 even area. So will be a destination point of this pattern. So what else we could watch for on the gold market? If we will drop further to the hourly chart, guys, here, while the right shoulder is forming. So to keep this context valid, we would like to see reasonable price action with our shape, right? So we would like to get some kind of the bearish reversal somewhere around 1350 area, just to keep the harmony of the shoulders equal. So if market will suddenly break it up and start to return back to this top, this will tell us that something is wrong. That's why as market is coming closer to this moment, keep an eye on these two levels. First one is 1340 confidence resistance. Market has penetrated it slightly just to complete the OP target of our A, B, C bottom pattern. You can see market has completed OP. But if it will continue to move higher, that will not become the failure of the bearish context yet. It just will tell you that you need to keep an eye on the next price level. So 1350 major fib resistance, 618 resistance of the whole drop down, and take a look, that's also the agreement with the XOP target. So that's the major point to watch for. Also here could be formed another shape of this Gartley's triple two cell. So Gartley's triple two cell very often appears on the slope of the right shoulder and the hand shoulders patterns. This is very often guessed here. For example, it could be in this manner. So you can see this leg, second part of the triple two cell will be very close to the top. So it will be just ultimate triple two cell where the ABCD target equals to the starting point of the drop. So, but this also could happen. That will be the crucial point, guys. If market somehow will break it up and starts to move higher, don't be short. It will mean that something is wrong. The market really has a chance to continue moving above this top. So this will be not a welcome event for us. But until market is standing here and could start to drop right from this point as well, because actually market stands in the confluence. This is also an agreement, as we have here. It's also a OP target. Theoretically, it's also could be reestablished right from this level or from that one. So that's two moments that we could keep an eye on. So actually, you could not to anticipate this reversal. You could wait for this reversal will start, and after that trying to jump in on some retracement. This is normal approach to the current situation, where you do not know from which level market could turn down, because here it seems that's too fast action up, and it seems market could proceed here. Here you're not sure, for example, that market will definitely turn down, and not sure taking the position or not. Just wait when the downward action will start. So as soon as you will see the starting dropping, fasting acceleration, you could take the position on some minor retracement. That's normal approach in the current situation. So let's keep watching. But currently, overall stop in the daily chart will remain bearish until market stands below this top. So let's see how it will turn.